Welcome back to this live session on Thursday, 12th of 11th of, which is basically 12th of February, some area maybe 11th, some area 12th, and coming up also later 13th in my area, which is very faster moving on. Now we are looking at some of the calendar here, starting with the first live session of the day, and I do come on live every single day. So starting with first of all today's calendar here, looking at coming up unemployment claims in just a matter of 2 hours, and we will be trading these unemployment claims in this live session like we do yesterday. We have traded successfully NFP, and now looking at the unemployment claims, so you can see that XAUUSD little bit in a sideway at the moment, and that might pick up shortly after. And looking for some entry, gold is in is currently in a consolidation, and that consolidation might in fact breaks out shortly after. So welcome. Hey, welcome. Thank you very much for joining here. Welcome. And thanks for joining. Now, looking at this market structure on gold, which is showing that the market is significantly trending at the moment. And with the trend, we are looking at the market structure to show up. And I'm looking at potential entry in this market after an initial breakout. All right, so looking for everyone to show up, and then we'll begin. Cesar, welcome. TJ Chan, hey Nizam, welcome. Thank you for confirming. And guys, make sure that you like this stream and also subscribe to the channel if you haven't done yet. And looking for some members to join up. By the way, for those who don't know my name is Nizam. I'm a trading coach, trading for more than nearly to 10 years, coming on live every single day. If you guys and girls are enjoying the live session, make sure you like this stream and also subscribe to the channel if you haven't done yet. And share your thought and opinion in the live chat, what you are looking at today and which way the market is heading back. Now, market, if you look at here on gold, is in a interesting pattern that you can see. It is in a triangular pattern, bullish. Okay, now if you look at, you can see that this is a significantly in a sideway but moving in a very narrow range. You can see that this is a narrow range right now, like this. And with this narrow range, right, the market is this kind of, it's kind of, see, the market really form interesting structure more often. But if you look at this market structure here, usually because this is a long-term bull market, right? Now with that long-term bull market, we can see the market may break the low and then potentially to continue to trend back here to the upside in that market. So therefore, in the beginning, we might see that the market is eventually breaking that low. Okay, so if the market breaks that low, that might bring a new trading opportunity here, and I'm waiting for an entry of this support level here. And that's the key here. If we see the market is breaking out of that structure, we will be looking at the entry in that market, and it's important to look at. Okay, now at this point, if you look at in that area, so this is a triangular pattern that you can see, and of that triangular pattern the market may break back to the upside and to create a new higher high. And this is what we are looking at in this market to give us an entry in the major direction of the trend. So looking at here, okay, with this movement we will be looking at the market to trend in the major direction and potentially breaks out of that triangle, and then to give us a potential entry opportunity here in that market. And that is crucial to see that how the market is evolving over time. And if you look at, because it's approaching to this support level where we are looking at the market to breaks out of that structure and to give us that entry. The key here is to look for a market that can gives us high probability entry. We don't want to enter off, you know, a consolidation pattern, right? That's where the key, that's where the bear trade comes in play. Because if you look at a market trading in a consolidation, guys, don't trade the consolidation, okay? This is where you will find that the worst trade coming, right? Because I've been trapped many times trading in consolidation, especially if you see that 1 or 2 candle range, there will, you know, that will definitely you know, ruin your trades. So it is always the best idea is to look for a market that has a trend. All right, so and when we see the market in a consolidation for long enough, you'd see that the market in this consolidation breaking out strongly than ever. All right, let's look at that here now. Okay, now in this area, if you look at here, this is a support and it's a key triangular pattern, right? And in the triangular pattern, expecting the market to break that low and then to reverse again back to the upside, right? And always look at the poles, okay? This is what I call the pole. Now, if you look at, you know, always there's one pole here, there's another pole here, okay? And it's built that connection. So if you look at this pole, the market usually breaks out of that pole. And when you see the market breaks out of that pole, especially the market when range in such a smaller range, it form a kind of one pointed concentration in the sideway, and then the market of that sideway usually breaks out of that and then trend in the main direction. So the major direction of the trend here is to the upside. If you look at from this level, it dropped well back below, and now the market is, if you look at, had gone down well below, and then of this support it might a trend back to the upside here in that market until we see that breaks out of that 1 point. We will be waiting. Usually if you see this kind of market structure, it normally breaks from from this consolidation, that means from that pole, and then trend in one direction. That means it might trend in downside, and after this trend to the downside, it usually reverse back to the upside, and that's where the entry. Now, without breaking below, I wouldn't be interested on this market to trade it, and that is where the high probability entry comes in play. I hope that makes sense to you. And let me know if you guys have any question in the live chat. We will be looking at also the calendar, how the market is doing here. This is a calendar here, and in that calendar, if you look at coming up unemployment claims in less than 2 hours, all right, and with that unemployment claims, if you look at the market is in a trend. And if you look at here as well, okay, which is tomorrow we'll be also trading, but today we can see that the unemployment claims, right? So unemployment claims is the big one coming later today. And I think with that unemployment claims, the market is breaking out of that consolidation. What do you think? I'm sharing a poll here. What is your bias on XAUUSD today? So with the upcoming, okay, what is your bias on XAUUSD in unemployment claims? So that's where you can. So what's your bias on XAUUSD in unemployment claims today? Bullish or bearish? That's gonna be interestingly, if you look at the past polls, almost 95% of the time the poll results came out to be correct. So if you cast a vote, definitely it's gonna be something worth looking in few minutes, and that's how we can know that actually what majority of the traders are thinking about it, right? Thank you. Waiting for the support to break and then to enter. Hello, welcome. Sure. Thank you. Okay, we are looking at the news coming up later, which is unemployment claims, and with dollar, 3 high impact news coming on dollar, which is the CPI. And during that, the news announcement, we will be looking at some entry along the way to see where the market is heading at the moment. And that's significant at the moment if you look at. And also this is the lower time frame structure. Now when we are looking at gold for an entry, also we are looking at here DXY. Now DXY is important because if you look at here on DXY, this is where on the monthly chart, okay, maybe it will be big candle like yesterday. Yep. Now if you look at the monthly price action here, okay, now this is where the monthly price action on DXY after the previous monthly bearish engulfer, we can see that this month the market has created also bearish rejection. Now rejection or correction, but we can see the market is in the movement. If you look at after the previous monthly candlestick pattern as a middleman testing that 10 exponential moving averages, the market has formed this long wick candle. This is what I don't think a rejection, but potentially a strong movement for wick fill here in that area. So therefore from the monthly on DXY, we could see the price to eventually continue to drop here. Now if we look at the weekly chart here, that you can see this is the weekly market structure where from the weekly, this is a head and shoulder, right? And with that head and shoulder, okay, with that head and shoulder, the market is showing up that, and I'm going to look at, guys, bigger picture, looking at, you know, this is called the bird's eye view. Stoics normally use this practice. If you look at, you know, Stoics are some of the people in some other cultures. So Stoics normally use this practice called the bird's eye view. So you go at the top in the sky and look at everything from the top, and you will see that largest buildings will look like an ant, right? So if you look at the similar way on the market from the bird's eye view, then you will see that the bigger picture. Now when you look at the bigger picture here, this is a head and shoulder, and that big head and shoulder means that longer term you are looking at this market to drop well below, potentially coming to that support level. So the bigger picture showing that DXY potentially to drop down. Therefore, what is the advantage of looking at the bigger picture is that the smaller picture will always align with the bigger picture, right? So there is always, you know, small and big when you can align them together because they are emerging from the same time frame. So if you look at that monthly and then weekly and go back to the 5 minutes, 15 minutes, you'll see that they actually coming from the same point, right? One monthly candle holds the whole 4 weeks candlestick pattern, and again if you look at this weekly candle holding the all those daily candle. So you are just zooming out one after one. Now therefore from the now lower time frame we are looking at on DXY, that we can see it has created this structure. Now yesterday we saw there was an unusual move on DXY. There's a breakout and many traders thought that it's gonna be a reversal, but in fact it is. We see that it didn't. Usually this kind of breakout to the upside is a sign of further downside here, because there is a significant amount of liquidity gap in that area. And with that liquidity sweep here on DXY, the market may continue to drop here, and that drop might bring that price well back below to this support level. So because usually if you see the market is going against the trend with a larger ATR candle, you'll see the market in fact preparing for another move in the opposite of that breakout. So that's what you can look at here in the market. All right, so this is what we're looking at here, and this is what we are looking at the market to trend back down here to this support level. And therefore if DXY is coming bearish, now we can just mirror it like this. How can you mirror DXY? By looking at gold chart, right? So gold here, what you can see, now you can mirror it, right? So what it is, you see different in your chart and mine. Gold no volume. Yeah, there is volume. You want a bit more higher? Okay, let me increase it. Is okay now? Okay, so let's now look at here on gold after this narrow consolidation here. With this narrow consolidation, until it breaks out, we are looking at. Now, let's understand that what is the potential reason for this consolidation. Suddenly the market have a little more, a little downside, right? And okay, I'm going back again to the lower time frame, guys. So here the market is slowly building its momentum here. All right, so there is an inverted head and shoulder in this area that you can see, and that inverted head and shoulder, okay, if you look at here, that might be showing up a bullish pattern in that area. So therefore, with this movement, if you look at that inverted head and shoulder has created is entirely broken out of the structure here. Okay, we see that there is an entire structure broken. Here is entire drop that you can see the market is breaking entirely below. With this high here, the market is entirely coming down back below to this support, and that is where you can see the price is approaching that level here. Okay, we see that there is a breakup structure, and that breakup structure might bring some trading opportunity here, and I'm looking at for the market to eventually create a new trend. And if you look at here, back to back 2 long wick dojis here, and they're off this long wick doji, expecting that the market to eventually trend in one direction, either this way or that way. And we're looking at the market to show up its pattern here in that area. Welcome to the live session, traders. I hope that some of you have just joined, and this is what you're looking at today. The market little consolidation, little means that a bit of extended, but which is in another way creating a new trading opportunity, as with the updated structure here that you can see. That updated the structure that you can see could bring that market moving in one direction, because here is, if you look at that sideways movement may break in one direction, and then the market could start to trend in the other direction. And that's what we're looking at here in that area. This is significantly long wick doji here in that area, and that doji might be breaking back to the upside here. So we're looking to see, and market is in significantly low in volatility, if you guys look at, and that that lower volatility that you can see is in fact potential for breakout. And can you know the reason for the sideways market? Let's understand that one as well from the fundamental. If you look at, see some news coming up here. So there is some news came on yen, and USDJPY might get pretty volatile. If you look at BOJ could hike rates as early as March up to 3 times in 2026. How does that impact at dollar yen pricing? Let's look at that one here. Now, if you look at USDJPY, right, so which is a crucial price action. Now, USDJPY trade that I have opened is still running. Now, what's happening is that with yen, are you waiting for a trend line break and retest to take a buy? Yes. Yes, this is what exactly we are waiting for, the trend line break and then to retest for buy. Perfect. So this is what we are waiting on gold, that break of trend line, right? This is the lower trend line because it's in a bull market, right? It's in a bullish market. So therefore, because it's in a bullish market, you want to see the market has broken out of the trend line, which is break of structure, and then the market to continue to rise back again to the upside. Because if we see the market is breaking off that trend line here, right? That's gonna be a significantly important price action that you can see here in that area. And with that break of that trend line, if it drop down to any of this key level, we are looking at that entry opportunity here in that market. All right, so this is where we are at, while we can see some of the significant move on dollar yen. Now let's look at also dollar yen. Even though we are seeing a sideways market this week since Tuesday, very interesting that we are always making higher highs, making higher lows, and attempting to make higher highs. Now that's a really I would say that admirable observation. Observation is key, right? If you look at, this is the daily market creating series of higher low. Now when you see that an uptrending market, right? Keep in mind, traders, this is key. When you see a market is in an uptrend, all right, and when the market in an uptrend, look for the higher low. That's where the secret. You see that in this market, the top is very messy, like up and down, up and down, up and down in that area. Okay, this is very like that. But the lower part is okay, smooth and creating series of higher low. That's in a uptrend. Now, what is the advantage? Advantage is that when you see that an uptrend and series of higher low, and when the market breaks that series of higher low, pay attention to that support level. So now the current, if you look at this one here, this line, this is the current support level. And this current support, that means the previous session's low. And that's where you want to see the market is coming down, breaking that low, and then retesting back to the upside. All right, so we want to see that break below. and then to return back to the upside here. Bring a little bit of music, and then we will be looking at entry, waiting for that breakout. Still there isn't strong volume here. That you can see the market is moving still in a narrow sideways range, and we want to see the breakout. While we can see there is some move on dollar yen now with the increase in the yen's, we can see BOJ good high grades as early as March up to 3 times in 2026. Mizo executive says, okay. All right. So now a technical question that will change the way you look at the market, guys. This is the best like fundamental that you will know here now with this news. All right. BOJ could high grades as early as March up to 3 times in 2026. After this news, usually if JPY index goes up, if BOJ rate hikes, JPY will be stronger currency, right? Now, but we can see that dollar yen now is going back to the upside. That means JPY getting weaker. What's the reason? Reasoning is the what I would say the highest level that you can achieve as a trader, right? So if BUJ rate hike rates, not rate hikes, or hike rates, rate hikes, hike rates, rate hikes, which one is correct? Hike rates, rate hikes. I think both are correct. Anyway, if BUJ hike rates, all right, then JPY theoretically should be stronger. That means in that case USDJPY should be falling, right? Now why is this going up as soon as this news has come? Significant question. In fact, it should be, right? It should be going down. But after this kind of news, the market doesn't go immediately lower. Why? Because immediate trading is come from the retail trader. Retail trader are sentimental. You see that as soon as the retail trader hear this news, they'll start to sell. But the smart money doesn't sell. They look for better price to sell. Because the smart money saw that this market has a potential for drop, now the market is going up, in fact, to create a better level for selling. That's how the smart money trade. So as a retail trader, if you want to trade like a smart money, wait for the market to go up to certain level. So if you look at the daily, you can see that today's market might, with the upcoming dollar index, with the upcoming news, the market might go up little further for liquidity sweep. And the chances that this market, if you look at this A shape or inverted V shape or whatever you want to say, it's basically a high potential for bearish move in that direction. Now, because the market is in that direction and going back to the upside here, we'll be looking to see on dollar yen. Also, I had a trade, but let's see how it goes. We will be re-entering again on a after the market creates a new opportunity here in that area. What it could do here, if you see here, there is a narrow red candle daily. It might form another green candle, narrow long, and then it may form this head and shoulder and could drop, or it might move up for a deeper pullback and then could drop, depending on how the market wants to create that structure here. Now, going back to gold here, what kind of market structure is formed? I'll be just back in less than a minute. We'll take a 1 minute break. We'll be back. movement. I'm back on track, and here is what it is. Now, here we can see the market created a lower time frame head and shoulder on gold. Now, this is in this area. If you look at, if you ignore the overall market trend, then in this area, this is a bearish market structure, and that could lead that market eventually break below here. And with this head and shoulder, if you look at, usually when you see the market form this kind of head and shoulder, okay, with this head and shoulder, the market more often to break this trend line and then to go back up with a one single move. Usually when there is a reversal, stronger move followed by this pullback, and the market to return back again to the upside here in that direction. So that is what usually happens the market if you look at in the longer term picture. And at the moment, until we see that consolidation has broken, the market has rejected, we'll be waiting for that entry criteria here in that market. And looking at again news, it's important to always look at the fundamental. Guys, look at, and that is where there is high probability trade, because when there is a fundamental, there is a move in the market. Okay, now going back again a little on DXY to see what kind of market structure it is forming. Now DXY, again looking at the longer term picture, we see that again I'm going for a short term analysis on DXY for the long term picture, that you can see DXY, if you look at this, is key level, right? And the market has significantly consolidated in that area, and there was a breakup structure yesterday. We have seen that with the NFP data there was a short-term spike to the upside. Now that spike, as I mentioned earlier, it's not a potentially change of trend. Instead, with this spike, the market has formed a level here. So therefore, in that zone, that if you look at on DXY has broken back to the upside, tested this level, could be that the market now after multiple rejection, this is a potential preparation for DXY to be bearish here. And because this move that you can see, it was significantly bullish reaction back to the upside. What we could see here, there are two potential scenarios, guys. This is will really you look at the longer picture here. Now firstly, in the 4 hour is important. If you look at, there is a long wick big candle, there is another long wick doji. Now after back to back two long rejection on DXY here, what's happening, the market is, this is a long wick and there's another long wick here, right? Back to back two, and you can see the market has formed series of lower high in that area. And with this formation of series of lower high on DXY, the market may break below here, right? And with this series of lower high, the market may break below. Now there is another potential scenario that the market may retest this high again. And if the market goes to test that high, this might create a new higher high, because the market little bit of imbalance here, that I would say little bit, because it's very narrow. So look at here, and this is the swing low. So the market might try to fill that imbalance and then could return back again. In terms of the reversal, I think it's less likely. Nothing is impossible in trading. There might be significant change in the market sentiment with the global tension, global crisis. But with this movement back here, this might be a liquidity sweep, and the market may continue to drop here, back below. So therefore, in that area here on XAUUSD, we are looking at this market to eventually drop down here, right? So we're looking at to see. Now, if DXY is dropping, we are still bullish on gold, but it's on a very narrow range. If you look at this kind of range, it's important to pay attention. And I have turned off my automated system for some period of time to finish that zone to the market to prepare for a move. It is important to look at. Okay, slowly the market building its pressure. It's in a narrow range. It's in a narrow range, guys. I'm really looking to find an entry, but the market is in a significantly narrow range. And because the market in a significantly narrow range, we are looking at that market. Here's the market is moving in that area, and we're looking to see the market to eventually break that and then to return back again in the direction of the trend. There's a gap open and waiting for the market to show up. We see the price is slowly building its momentum in that area, and okay, so it's breaking down now, as we discussed that. As this is key here to look at. The market is slowly breaking that level of support, and once the market breaks properly back below, we'll be looking at entry back to the upside here. With this break of structure, the market is slowly breaking, as we discussed from this tip. The price is slowly building that momentum, and this is what you want to see the market to show up its pattern in that area. Good day, welcome. Look, we are creating, again, we are still creating higher low despite the drops. We are looking at that that zone here. Okay, so if you look at, this is a narrow sideway movement that you can see in the market, right? And that narrow sideway movement, if you look at where what we are up to, the market to break from that consolidation first, because if it is breaking from that consolidation towards the downside, we are looking at this market to break to the upside again, and that's where the best trade comes in play. Right? This is what we are looking at in that area, and once the market below all this low here, it is an opportunity to go long. Are you guys ready for an entry? So yes, the market is breaking below to the trend line, and I'm looking at an entry with risk management of this support. That's what we're looking at for this market to give us an entry opportunity. There is a double top here, and the market is breaking below, coming to a no man's land here. That I say no man's land is because there isn't any significant support in that area. That means once the market drops well below here, it might get ready for a possible entry back to the upside, though there is a news coming. Let's look at the data again news, how the market is going to have that impact here. So if you look at unemployment claims, so also you know that this is always I look at when you look at the fundamental, right? Now the fundamental is fundamental to become a better trader. Now how do you use the fundamental? Most people try to, now what I see guys in trading, the fundamental more of out of textbook, right? You'll see that the fundamental works more of out of textbook. That means it's mostly due to the sentimental, because the market is sentimental, right? It's driven by emotion, and emotion is sentimental. So you see that's why when there is a high impact news, there is a data, the market fluctuate a lot, right? And it's because of it's mostly driven by the fear and greed. One of the biggest sentiment that you can see in the market is the fear and greed. Which one is stronger? Understanding emotion will give you a better perspective of the market movement, because emotion is an integral part of human nature, right? The human being is driven by emotion. So which one is stronger? It's driven by pain. No, it's not driven. The market, that's a pain, right? Emotion is a pain, and different kind of. So fear and greed is not, it's a short-term pleasure, but which one is stronger, greed or fear? Have any idea? This will give you then you can understand the sentiment, how the market really moves. Which is the stronger emotion in between greed and fear? Okay, so fear is stronger than greed, right? Greed, fear. Okay, so if you update. All right, so greed is strong, but fear is stronger than greed. Why? Because fear is primitive, right? If you look at a very smaller bacteria or even an ant has fear, right? Have you ever seen that ant is moving on the floor, smaller object pulling together? Suddenly if you touch that, have you ever seen that what the ant does? They just quickly start to run away from that. It's because of the fear, right? Fear of like threat or survival. So that ant also has that. It's a primitive emotion, that is the fear. And fear, that's why fear is stronger than greed. And in fear also there are a couple of kinds of fear, right? There are a few types of fear. One fear is that people fear more losing what they have rather than gaining. Greed is gaining, so you want to get more. Fear is losing what you have already. So therefore fear is stronger, because people fear losing more than what they want to gain. So if you give a person an option that, okay, you're gonna you have an option to take $1 million, and you have an option to take a risk to lose $1 million. But if you you lose $1 million, but if you gain, you will gain $10 million. People will not take this chance because it's fear of losing what you already have. So this is primal. That's why the market is driven by this emotion, and these are the sentimental. Therefore, if you look at this sideway market, it's breaking below, and that during that news, this kind of emotion is at play, though it is at play at all time. Now, looking at the market here, there you can see this is the 20 exponential moving, 10 exponential. The price is coming down here, and these are the emotional response that you can see in the market. Now, for us to be able to enter a trade, you want to see that all of these indicators aligning for us to be able to find the proper entry opportunity here. That's why trading is hard. In fact, this is where the emotion. Okay. Now we see the lower time frame market is in a trend here. And with that, the change of trend, we are looking to see the market to potentially come down further back below here in that area. And this is the current level of support that you can see. Okay, here is this is here we can see the market is still in a downtrend. Okay, still in a downtrend. We might see the market to eventually continue to drop further back below here. Okay, we need a little bit of music and then starting. Until we see, patience is key, guys. This is where you will be really learning the real trading here, is to look at the patience. Is there any change in the, okay, this is not what we're looking at here. Here the market is in a downtrend. There might be further downside here, though so far this lower time frame trend that you can see is now here significantly bearish. That we are looking at this market to trend back down further here to create a new lower low. Okay, it's breaking out of that structure that you can see in that area. Okay, so lower time frame from the 5 minutes, this is so far in that area, so far is still showing to be bearish. We might see the market still to remain downside here in that area, and that could be that the price eventually may drop down further back below to this support level here in that market. Okay, so lower time frame here, we see that there is a break of a structure that might bring short-term trading opportunity. Short-term, it is here is still potential for sell. So the 4-hour level is here. There is a 4 hours 20 EMA. The lower time frame market structure showing up to be downside here, and this is what we are looking at this market to trend back down here to the support level to create a new lower low. You can see the market slowly moving back above here to this key level, and this is structure that you can see the price is slowly building its momentum. Okay, that move that you can see is potentially bringing, now it's on the support, it might move back above here for another liquidity sweep, and so looking at, again, going back to the DXY here, that you can see the market is here in a sideway, moving in a sideway, and that sideway market might retest that high and could reject back below here in that direction. That might happen on DXY for the market to eventually come down below in that area. So we have few minutes for the unemployment claims to come up, and while we can see that gold here of this level, it initially moved back up. We are looking at this market to show its pattern, to show that the market to trend back down here to this support level. And with this movement, if you look at initial move, pullback, another move, expecting that to come further downside here. We'll be looking at that market structure show up to see how the market is creating this structure here and evolving over time. And it is another important point. If you guys looked at the market is constantly changing, right? Should we buy? Not yet. I can't tell you whether you should buy or no, but I'm not buying yet. And if you look at here, the lower time frame, this is the 1 hour price action that you can see, guys and girls. This is a bearish engulfer, right? And until we see that it is a false breakout and going back to the upside. So if you look at this is a false breakout on the market going back to the upside, we could see that this market eventually breaking below here. So if the price from this level break below to this support, that's gonna be a good move for us to take. And here short term is still there is a possibility to come down further, and it's moving back forward to the neckline where you can see the market is approaching that level. It might be changing here in this direction, the trend. So it's breaking that high in that area, and with that break of this high, the market is eventually moving that part. And if this drop, traders, if it was little downside here, that could be that was a really good entry criteria here. But you see the market didn't move that much lower here, and I'm a little patient because we had a very high return on our signals, but I don't want to miss that, like lose that consistency here. More important is how we are looking at the market. It's in fact it started to trend in that direction. Can we see a spike down with the news? Now, very possible. All right, so if you look at, I'll delete all those levels because now the market changes. Now if you look at the daily, all right, so let's look at the daily market now. Usually if you look at this, the previous daily candle is a full body green candle. Right now the market failed to create a new higher high today, right? This is crucial point that we need to look at. And so what happened is that if you look at this green candle followed by a narrow red candle, and this red candle was not new higher high. Instead we saw that a green candle formed new higher high. So today the market couldn't break this high because it failed to create this new higher high here on the daily today. This price very highly likely that required to break the daily low to be able to find new momentum for creating a new higher high, and it needs to break the support for liquidity, and that break of support might even suddenly come back to the weekly low, which is a one possibility. Now the bias at the moment from the lower time frame, we could see that the market is coming to break the daily low because it's a long-term bull market. Therefore we could see that the market to retest this daily high or the daily open and close, and the market to revert back again below here to this low, and that's where possible entry will come once the market breaks below. Now still we can look for some short-term selling opportunity here in that market today, because it is less likely the market will be able to break this daily high without creating lower low. Now going back to the intraday, this 4-hour candle that you can see here is crucial to look at, and that intraday 4-hour candlestick pattern that you can see here, the market to come down here back below, and where breaking below can give a higher possibility the market to trend down, right? So here is what we are looking at, this market to come back down, break the low, and then eventually, if the market breaks below, what we could see in more often, you see this kind of market structure. This is the 4-hour large red candle, and this is a stronger liquidity sweep with that candlestick pattern. This is more than 2.5 ATR candle, and after formation of this, the market is in a sideway. In those situations, you see the market usually pass that low, extend beyond, and then trend again to break that high. So this is the high of this 4-hour, this is the low of this 4. This is a liquidity, stronger liquidity, so there is a manipulation here. So this market more likely to break this low, extend beyond, and then to trend back again to the upside. This is higher possibility for this market. Therefore, news might do that. We might see the market eventually to come back below. Yes, we can see that potentially. Like, we can certainly say, but there is a higher chance. We are nearing to the end. We are nearing to the news schedule, which is coming in just a matter of 12 minutes, and we want to see that. Now, how does that also, if you looked at yesterday's NFP, that has got really significant move in the market. Now, how does this today's unemployment claims also could impact the market? Now, this is a fundamental part of trading, right? Which is fundamental to learn trading. So if you look at the unemployment claims coming in just a matter of 10 minutes, let's look at also the pool. Had 79 votes, bullish 56%, bearish 46%. Let me end that poll, and you guys see that it's really reflecting, right? This is what I was saying. 95% of the time, pool's results reflected. Now, if we look at this market here on, okay, so unemployment claims let's understand the data, how you will interpret if you want to trade the news, or if you want to look at how the news works. Now the data is important, right? The number of individuals who filed for unemployment. Okay, so how does that overall data is reflecting in the market movement? So unemployment claims, if you see that more unemployment claims, more people are claiming unemployments, that shows that there is a less job created. So which is a slowdown of the potential economic growth that indicates. There's a very, like, it's always, remember guys, this is a two-edged sword. This is interesting. There's always two sides in those situations, but with the best outcome comes from the middle point, right? Have you ever heard of that? This is where the best, because in either spectrum is where the market, like anything, will be very difficult to do. If you look at, so when higher job, less inflation, which is difficult to achieve, but it's possible. When you make it in a central, that means, for example, if you look at the higher job, less inflation. Can you, because if you see that the higher job, okay, then the inflation rises. But higher job, less inflation, and in an optimistic way, like the optimal point, that's where the best growth happens and the economy is very stronger in that situation. Now we see that there is an initial move back here to the upside. Pennant. Looking at gold here, gold currently we can see that off this support level here, the market is slowly building its move back to the upside. And yeah. There was significant move that, especially due to the NFP. NFP days is significantly important. Just yeah. Look, the waiting is the best thing you can do, especially in trading, right? In trading, less is more. Coming late is better. Along Bitcoin, that's about it. In trading, less is more, right? This is a pretty long week candlestick pattern here, and I see there is a mirror, eh? We can see that the market slowly off this support level. And we can see the drop. You see the drop with the news as this was one single move. A breakdown is needed, it looks like. Yeah, this is what they're waiting for. That if you look at that, the market to break off that support, breakdown is needed, because without that breakdown you won't be able to find the market to show up. Yes, we if there is always equal buyer and seller, the market will not move, right? There has to be an imbalance to move the market, because the market moves from imbalance to the imbalance, right? So if you look at that, yeah, hi guys, welcome. Yeah, the market moves from imbalance to the imbalance. All right. So if you look at, if the market is in a, like in the center, yeah, and creating series of low or high here. Now, what, as we discussed, that the current level of support is at 5019. Okay, later. Yeah, when there is equal buyers and sellers, you will see the market will not move, because there is with these equal buyers and sellers, the market doesn't create that imbalance between the buyers and sellers, and that is where the high probability trade comes in play. All right, so if you look here, this is where the market, this is a pretty stronger sideways movement that you can see in that area. Would like to see the price is breaking that low and then to create a new lower low. Okay, we have only 0 second, right? Spending 227k unemployment, a little more than that expectation. The forecast is 222k, unemployment claims is 227k. So that was, we can see how the market has reacted to that. If you look at here, now this is where the market is in a, this is a support level. The market is slowly building that momentum here in that area, and this is where the price action showing up here. So how does the data has, let's look at the DXY, which is crucial to look at. Now DXY, as we have discussed, that it's a long-term bear market, and we might see DXY to potentially to trend down here, and we can see the market is showing that pattern here, and we can see the market is maintaining that downtrend here on DXY. So with that downtrend, the price may eventually break that low here to this support level. Now if the DXY is remaining bearish here from the long-term picture, we could see the market on gold to remain bullish, and we have seen that after this multiple break, the price slowly moving back to the upside to create a new higher high. Breaking for the downside can be a key level, can be an important support level, and the market may eventually reverse off this level. And more often we open 2 to 3 trades, guys. Today so far we couldn't open. It's the market is really moving in a sideways, and that's fine. That's how trading is. We see that there is a bullish bias, but I'm still not fully impressed with the fact that this market is still ready for opening any positions. A fully sideways market at the moment. So unemployment claims came, and with it's a little different than NFP. So NFP was pretty positive, and unemployment claims has come out a little different, but this data basically not, we can see there isn't a strong reaction in the market of this data. So we will be looking to see a strong reaction of the data so that we can trade those situation. But it's still time remaining for that reaction to come up, and that's where we are looking at that market at the moment. Along with DXY, as you know, that we are also looking at USDJPY. Now USDJPY, I have discussed that there is a higher chance for this market to remain bearish. Now dollar yen, of this support, had a trade that it didn't work out, but we will be looking at further entry. Now daily price action on dollar yen, that you can see here, this market is in a downtrend, right? This is the current daily high here, and of this daily high on dollar yen, the market has shown that pattern that you can see. The price may continue to drop here to create a new lower low, and where we can see that because the market trend is here bearish, we are looking at any kind of selling opportunity on dollar yen. And with the data, we see that slowly DXY turning to the bearish in the major direction, where dollar yen, here you can see the market also turning to be bearish for the longer term picture. Now the market has crossed key area. This is a key level. There's one possibility remaining on dollar yen still, for the market to go ahead and retest this high again, right? So if that is happening, then we might see dollar yen to try to push up further. Do you think so? The price action on dollar yen bullish are very, very weaker, that you know that. Okay, all right. So now, because the price action is significantly bearish here, we can see the market is showing up in that area. Okay guys, so we see that dollar yen is melting back below here, having a bit of volume. Okay, we see that there is a break of structure here, right? And the market is moving off that level, breaking above here, and so no chance for drop tonight. There is chance, and I wouldn't, if you look at the current consolidation, I'm deleting all those levels to refresh the chart. I wouldn't consider it as a reversal yet. This market less likely to be reversal without significantly lowering here, right? If you look at, instead it might create a selling opportunity potentially of this daily resistance line. And that's the key here. That's the key. So this is the zone that we might see that potential selling. Here we might see that it's creating that structure and then potentially coming down back below and breaking this long trend line entirely, and then to return to the major direction of the trend. This could be the potential wave on here on XAUUSD. There is a chance of drop, and this is what we look to see. Now we our trade today might come later after the market breaks out of this structure. We are almost here at the end of the session. We looked at the unemployment claims. The market did not respond as we expected. That is potentially preparation for bigger move coming tomorrow. If you look at core CPI, and CPI, we'll be trading in this live session with all of you guys. girls and traders together. And here I'm looking at later to see what's happening for the market, and I will keep you posted and updated if there is any update. Make sure you join the Telegram. You can find link below this video for more updated as well as education as well as analysis that's shortly after coming. That being said, traders, it was a great session with all of you. So looking forward to see you tomorrow here trading live together. Until that, stay well, stay happy.